This podcast is made possible by High Radius.
Hi, this is Gina Mastantuno, the CFO of ServiceNow, and you're listening to the CFO Thought Leader Podcast.
This is episode 808.
So we've started tracking who are the typical investors in our kind of businesses, whether they're growth businesses or telecom businesses, and we've started doing some outreach to these investors. So my next focus is really internally to do some more build out on the SOX compliance and some of the strategic finance initiatives I talked about. But in addition to that, to be very externally focused and tell our story, whether it's in conferences or in personal meetings, to other investors who could become very interesting shareholders of the stock.
Hi, it's Jack. On today's show, we speak with Komal Misra, CFO of Starry. When Komal Misra, an engineer turned asset manager, decided it was time to once again make a career change, she couldn't help but think of her career as if it was a stock in her asset mismanagement portfolio. If the next chapter of her career was going to enjoy a healthy 10 to 15-year run, Misra reasoned, the macro trends would need to be a key determinant in the trade she was about to make. We speak to CFO Komal Misra about that trade and how it ultimately led to the CFO office after this. Did you know more than 60% of B2B invoices are paid late? Well, then it should come as little surprise that the priorities of finance leaders have shifted towards accelerating cash recovery and scaling business growth. To address this issue, High Radius now connects your credit, billing and invoicing, cash application deductions, and collections into a single business process and empowers your finance team to champion your business's high-performance culture. More than 700 of the world's leading companies have transformed the office of their CFO with High Radius. Unlock working capital and reduce bad debt with the best AI-powered accounts receivable management software. To learn more, visit us at highradius.com. Hello, we're speaking with Komal Misra, CFO of Starry. Komal, welcome.
Very nice to meet you, Jack, and very happy to be here.
Yeah, well, thank you for the time. And as always, we're going to ask you to look back for us and try to identify some of those experiences you feel prepared you for a CFO role. What would those be?
So, there are quite a few actually. And I think one of the aspects that I always have to remember is that to be a CFO, you really have to have a good head for numbers. And I did that very early in my career. I actually started out as an engineer. I have a electrical engineering degree, and I went to school in this little town, which was in North India, about 3 hours away from the capital of India, from New Delhi. And I started out as an engineer, and I also learned as part of that process to be at ease with being a lone wolf in a male-dominated industry, which again holds me very well today, given that there aren't that many women CFOs around. And back in those days, in the mid '80s, women didn't really pursue engineering as a career. And so in my school and in my class, the number of women were probably less than 3% of the graduating class. And that really sort of helped me in the long term, because even though I started as an engineer, I realized very quickly that in order to be heard and in order to have a leadership position, I have to be very comfortable in male dominated industries, in being respectful of everyone around me, but yet forceful of decision making, thoughtful insights, which I think are necessary to be shared with others. So I started my career as a power plant design engineer in India at a small private firm called Punj Lloyd, and then very quickly realized that it was going to be very tough for me to have a really uh, successful career in engineering as a woman. And that led me to the US. The US, even at that time, was decades ahead of India in terms of just giving opportunities to women. I came here, I got a master's in computer science at Cleveland State University in Ohio. And I worked as a graduate assistant. And I also worked off campus to earn some extra money. And then finally landed a job at AT&T Bell Labs, which was invigorating. As because it was, for me personally, it was just exciting to be in such a great organization where I could see women at very senior positions within Bell Labs. And that sort of set me on this path of always pursuing what I really wanted to do, being thoughtful, obviously, about my career choices, but always having the conviction that if I want to change something, I can change it and I can lay out a path to get me there. So that, I have so many stories about the many career switches I have made in my life. But honestly, when I think about what led me to the path of where I am today, it is that level of being flexible, that level of being thoughtful about where I wanted to be, and then setting a path to achieve that goal.
Excellent. Now, one of the I just want to ask you about some of the segue. You were at Bell Labs for more than 4 years, and then you changed jobs. And I think the next role you take on, does it get you more finance oriented? When did your finance orientation really begin?
So it actually, you're right. I was at Bell Labs for a little over 2 years. Then I went to business school. And that transition actually is an interesting one. By that time, I had met my husband, and he was obviously in a consulting he was in a consulting career, and we would have these many heated conversations about things that he was thinking about and things I was thinking about. And I suddenly realized that a lot of the strategic thinking that he was getting engaged in, I found that to be far more exciting than what I was doing at Bell Labs. And so I tried to get into the business of asset management without really going to business school, because I thought I was an engineer. I have this technology degree. I'm working at Bell Labs. I understand software. And all I needed was just a little bit of finance learning. And I had hoped that someone would actually invest the time to teach me that. But I had a very hard time getting a role in asset management. It tends to be a pretty structured path, and most organizations looking for their investors or analysts like to have people who kind of have the finance skill set before they start at the company. So that's when I decided to go back to business school. So I went back to business school, got an MBA, and then went back and pursued what I wanted to do, which was a career in asset management, and really stayed in that business for about 15 years. And like you said, that was my first foray into finance. In my 15-year career, it really prepared me to be a strategic thinker, to understand what it takes to balance business and finance decision making for the best outcomes. And I interacted with so many smart CEOs and CFOs of companies at various stages of growth. Some of them were less than 100 million in revenue, others were billions and billions of dollars in revenue. And there was such an element of learning that came from those discussions. And that's sort of what I bring to bear in my current role. And when I think back of those interactions and that time as an investor, I'm always grateful for the experiences that I got at that time, and it has shaped my own thinking of what I want to be as an effective CFO here at Starry.
Now, I just want to mention, is it AllianceBernstein?
Yes,
Now, you did get your MBA at Wharton, but I get a sense you made an investment of time at AllianceBernstein, 14 years. And this is really where you begin climbing the ladder in finance and become a senior finance executive. Do I have that right?
that is correct. That's where I started with them straight out of business school as a tech analyst, and then spent a real, a fruitful amount of time there, learning not only how to be a good investor, but also to be how to be a good finance person. Because a large part of my role as an investor was to also understand what the numbers were telling me, how to think about an investment from a pure numbers point of view, and then marry that with whatever strategic direction a company was taking. So I think it really prepared me for a role of a CFO of a public company.
Wonder though, as you explained to us initially how you realized how much more interesting the work seemed to you compared to what you were working on as an engineer. Wondering when you do come to the operations side of the business and you go into industry, whether there was a similar period of revelation that you wanted to take on something of a traditional corporate finance role before becoming the CFO. I mean, did you experience that, or was it happenstance, or how do you eventually land in industry?
I would actually put that in as one of my aha moments. And I've had quite a few, and each one has led to a career move, which has been very different from my previous career. But I think it's one of the days where, I looked at my screen of all these stocks that we owned in our various portfolios while I was at AllianceBernstein, and it was a completely red screen. There were great businesses that were just being sold, nothing to do with the fundamentals of the business, but it was a macro driven trading day. And I looked at that, and then it got me thinking. I had invested so much time in understanding these businesses, what makes them work, why they were good or great investments. And none of that mattered in that moment of time when things were just selling off. And then I started thinking about just the industry of active management and whether I wanted to have another 10 or 15-year career in that industry. And it's funny. I sort of almost treated myself like I would a stock. I started with a very top down approach of what my options were within the business, and I said, I looked at the growth rate of the industry, I looked at the changing economics of the business, how sustainable was the profit pool, how many players were in the industry, just the way as I would have analyzed any stock investment. And it led me to a conclusion that really, in the long run, I if I wanted another 10 or 15-year career, I really should be thinking about transitioning to something that had a lot more staying power as compared to where I was at that time. And so I decided to reinvent myself. I was in my 40s at that time. I had had two separate careers prior to that previously, so it wasn't something completely new to me. But I that's when I started looking at what I wanted to do next. And I started out in corporate finance, not necessarily with the goal of becoming a CFO. I just mentioned earlier to you as well, Jack, that given my constant interaction with so many successful CEOs and CFOs, I was realizing that there are companies who wanted to bring someone in who was more of a strategic finance person as compared to your traditional corporate finance person. And so I had a few conversations. I went to work at Cognizant for about 3 years, learned the inner workings of a large mega cap company from a finance team point of view. And I didn't set out to be a CFO, but one thing led to another, and here we are. So I was very willing to take on risks in life and see where it led me, and not afraid to fail, because from my point of view, whether I became a CFO or not didn't matter. What mattered was that I was going to do something that was more interesting to me at that point in time. And so I made the transition.
Okay, that's a nice overview for us. Thank you for that. I want to kick off our business segment where we find out about Starry. Now, tell us about this company. What does it do and what are its offerings today?
So, Starry is, we are a broadband service provider and we are a very, very mission driven company. I think when you think about companies that are doing that are competing with us, most of the companies that compete with us tend to have broadband service offerings that are pricey. Customer service is not a main part of their offering, and they tend to have NPS scores which are really, really low as compared to us. And I don't know how many people are aware of this, but most of this country really doesn't have a choice when it comes to who their broadband provider is. And so there is an unbalanced marketplace where prices are higher and customer satisfaction is low. And Starry is a mission driven company, and we want to change all of that. We develop our own wireless technology to dramatically lower the cost of connecting homes to high quality broadband service, which we offer. And in addition, we are very focused on our customer experience. Our goal is to really delight our customers, and that's reflected in our NPS scores. Our score is 69, which is multiples of anyone in broadband services. And in addition to that, it is on par with some of our most beloved household names. So we are very proud of what we do. We also participate in something called the ACP program, where we offer very cheap services, broadband services for just $30 a month to many consumers. And it all sounds really simple and obvious, but of offering an affordable, high quality broadband service with very high customer service experiences is quite a tall order, and we are very proud that we are able to achieve it every day.
Maybe tell us a little bit about the history of its capital structure, maybe just an abbreviated history. Where did it initially get founded and how it was funded over time?
Of course, so we are headquartered in Boston, and we were founded about 8 years ago. And the founding team, most of them are still here. And the whole purpose of starting Starry was to actually improve broadband service offerings to consumers. And from a capital structure point of view, as you can imagine, it was a traditional startup with VC funding in the initial years, and then we brought in outside capital after that with some asset management and some asset managers and also some other private investors. But now we are a publicly traded company. We just listed on the New York Stock Exchange about 2 months ago, and so we are publicly traded today.
And the IPO was then what, just earlier this year?
Yes, we listed on March 29 through a DSPAC process. So we went through a DSPAC process to raise the capital we needed to grow the business.
You arrived in March of 2021, so within 12 months, less than 12 months of your arrival, the company's going public. I always say you're stepping onto a moving train. A lot's happening very quickly. Was the SPAC idea already under consideration as you came on board?
Yes, the SPAC idea was already under consideration. In fact, when I was talking to the CEO, it was very clear that he was going to pursue a path to a public listing. And I think by the time I arrived, we'd already decided that a SPAC was the best path forward, given the amount of capital that we had to raise. And so that was already underway. And I think saying that I arrived here and the train was already moving is exactly right. I came here, we were quite far along on many of the functions actually that were needed to be publicly listed. But I certainly came in and, hit the ground running.
But if you wouldn't mind, can you share with us some of the steps that you had to take to make sure the organization was the way it needed to be?
Absolutely. So my thinking, the way I think about finance is that finance always needs to be flexible and nimble to help deliver on business goals. So I've always kept that in mind in thinking about how to set up a finance team. So when I started at Starry a little over a year ago, our focus at that time was to get the DSPAC done and to do whatever was needed for a public listing. So I came in, there were a couple of small team changes that I had to make, nothing that material. But I did make a few key hires in order to enhance our external reporting functions, to hit something called SOX compliance, which I knew that we needed to do. But by and large, I think it was a great team I inherited. And with a few changes, we did really well. But going forward, when I think about what we need in the finance team, I think the overarching theme for me is I need to have smart and strategic people within the finance team so that they can truly drive real business decisions, which are important. I mean, we are right now at very early stages of our growth. And I'm starting to recognize that we need something called a strategic finance function within my team, which is honestly what I started my career as when I made the transition from investments to finance. And so I'm building out that team as we speak. I'm bringing in folks who can understand that how to marry data from the finance systems that we carry with the data that we collect on the operations side, and then to really get true insights from that about what we should be doing as a company strategically over the next year or 2 years. So that's a very key part of a team that I'm building out. And then, other than that, I think every CFO today is trying to deal with what it takes to be a company that has telecommuters. So there are a bunch of changes we need, whether it's within our systems or within our teams. I'm also very actively focused on that as a evolving need for the business.
How do you get visibility into those types of customer relationships? How do you look into your sales function and really understand what's happening?
I think a big part of it is we have tools within the sales operations function that gives a lot of insight onto every aspect of the go to market. Which promotions resonated with customers, where did we get the most success in terms of moving a customer from a cable provider or a Fios or whatever else there is that's available to them for broadband services. Once we bring them in, we track very closely what does or doesn't resonate with them as a customer service experience. And then, in addition, we track when customers leave us, why do they leave us? 90% of our customers leave us because they are moving to a different location where we don't offer service. Starry is still a high growth business, but we are small compared to many of our peer groups. And so many customers will actually send us emails and write us letters saying, I wish you offered service in XYZ city that I'm moving to. But since you don't, I have to transition to a different broadband service provider. So we do actually, I think one thing that we've taken pride on is the best way to maintain our NPS scores is to make sure we delight our customers all day and every day. And there are many tools that have been built, whether they are in house or they are off the shelf type solutions that we've customized in order to be able to deliver on that mandate.
It would seem to enter a new market has got to be awfully challenging. And just knowing, as you have already described the marketplace to us, where I am, there are two ways to get internet, and maybe a third, but it's not an attractive option for a lot of people. Am I right? Is it very challenging to enter new markets? It's obviously you're succeeding in doing that, but it must be time consuming.
So it's actually a lot faster than many of our peers, Jack, which, people don't realize how long it takes to lay cables to offer whatever form of broadband service that exists out there. What we do is we build out a wireless network in a city. And so it takes us about 6 months to offer broadband service in a city, and we are selective about which cities we offer the service in. We are in 6 cities today. But once we have built out a network to offer the service, after that, it just becomes a function of how many buildings we can light up to start targeting consumers within that building. And we have been we've had excellent growth over the last couple of years. This year we are going to get we are targeting more than 100,000 customers by the end of the year, and we are growing at a very high rate relative to our peer group. So people, I think consumers are ready to have a second, third choice relative to what they have today. And as you can imagine, I mean, there have been ads about this, right? If you're trying to get cable service or cancel cable service, whichever way it might be, people are just ready for choice. And I think Starry comes in with a choice that consumers like, and at the right price point and at speeds that they would like, both on the upload and the download side. So we are very proud of that aspect of our offering.
Wanted to touch on talent with you today. Is it an area that, I mean, you must be concerned with? Most members of management are, that these trends in terms of employee turnover and hiring being challenging, how that impacts the business? Is it something that you believe finance can must play a role into to help remedy, or what's your mindset when it comes to the talent equation?
I think it's, as you've heard from others as well, this is a very, very tight labor market. And so I actually work very closely with my head of talent development and talent acquisition in order to make sure that we are competitive relative to the market and we are allocating the right resources to attract and retain top talent from a total rewards point of view. And I think, every CFO has the role where a big part of our responsibility is to make sure that we plan for the right level of engagement when it comes to compensation, whether it's commissions or equity or cash or bonus. I mean, you have to, as a CFO, I think you're a key partner to all the business heads and the CEO and the head of HR to make sure that whatever it takes in order to keep your key talent is actually available to the organization. I take that as a very important aspect of my role, and I engage on that on a routine basis in order to make sure we keep our people and keep them happy and motivated and excited to work at Starry.
I'm wondering if something surprised you in regards to talent, now that you're really on the front lines, having taken this company public, and it's a sort of a transformational period for the company. And I'm wondering, in the past, you had exposure to the talent challenge, probably were briefed, but I'm wondering if something has surprised you here related to the talent environment that you never expected, or maybe you have applied more thought to it and have realized that the company at large needs to understand better a certain dynamic related to talent or the workforce.
So I actually work extremely closely with the head of with our COO, who has a large organization under him, and also with the head of people, who's responsible for many of the mandates that we put in place, along with the CEO. We are, like I said, we are a very mission driven company. And so we like to bring in people who actually align with our mission of always keeping customer satisfaction as the number one goal. And I am so, always pleasantly surprised at how many people there are, employees there are within Starry, where that is number one priority for them. And of course, we do surveys and we try and change some of the things. One aspect that COVID has, I guess, to a certain extent, muddied for most organizations is that whole concept of belonging to a community, and that's true at Starry as well. So what we've done in the past couple of months is we've actually had social gatherings for people within the different offices that they could go to, so that even if you were unwilling to come into a large closed environment like an office, you'd be willing to hang out with people that you know or who are your colleagues in an open space. The other thing we've done is we've started doing breakfasts and lunches on very specific days within the company, We used to do a lot more happy hours, but then again, the large crowds, I think, to a certain extent, has limited that because of COVID constraints. But that has helped retain a lot of our talent. And we do actively survey our employees for what they would like to see change. And one thing, just the fact that we are a newly public company, I think there is an aspect of rewarding people who've been here for many years and who have helped build Starry into what it is today. And we take that very seriously. So there, we compensate them fairly, but we also offer them equity grants that are fair and which help them to financially participate in the success of Starry as well. And all of those things obviously help you retain your key talents.
We have what we refer to as our finance strategic moment question, which is we just asked for a story or an anecdote during the course of your career, something that you responded to. And again, the idea is just to share a story that revealed, how finance was playing a strategic role in business. Anything come to mind when we ask for a finance strategic moment?
So, someone had once told me that a CFO's title should really be the head of nickeling and diming. And so when I started in this career, that is something that I had heard, not that I believed in it, but as I've been here now for a little over a year as a CFO, I could not disagree more with that characterization of the role. I think what I've realized, and I wish, I've seen many CFOs in my life, and talked to them and understood how they had approached issues, etc. But over the years, I have realized that a CFO's role is more expansive than just counting the nickels or the dimes, for that matter, because we play such a critical role in both guiding and growing businesses and helping hone strategy, but with a financial lens, right? And as a public company, financial lens is actually a very critical aspect of attracting the right kind of investors and shareholders to the company. So I feel like CFOs are very deeply embedded in both business planning. I talked to you about how engaged I am in hiring and talent retention and development. And we also help a lot with capital raising, supply chain management, etc., etc. Like every part of the business, I think, is supported by a CFO or a finance function. And it's a nice, privileged place to exist. So viewing it only as a bean counter is probably doing the role a disservice. And the advice I would give to new or aspiring CFOs is to think of your role not as coming from a place of no, but coming from a place of how can I, as the CFO, enable our goals? And really truly believe in that and explore all the opportunities available to you, because that'll give you a lot of room to be creative and also value added to the business.
Hi, it's Jack. I hope you're enjoying our talk with CFO Komal Misra. We certainly enjoyed speaking with her. If you regularly listen to this podcast, you're aware that we place a great emphasis on the professional narrative. Finance has entered the age of collaboration, and like never before, finance professionals are being deployed across the organization to engage and collaborate with others. Your professional narrative is the door opener, and you need a thoughtful, engaging, and self-effacing, that's a good word, self-effacing professional narrative. You have the experience. Now think about how to craft the professional narrative that allow others to understand all of what you have achieved. It's not easy. You need a 3-minute professional narrative, a 2-minute professional narrative, a 1-minute professional narrative, and a 30-second professional narrative. That's for the elevator. How you introduce yourself to others matters. As always, thank you for listening. Now back to our talk with CFO Komal Misra. Did you find when you moved into the corporate finance role environment, that it was so very different from your asset management in terms of how people collaborated with each other? Was it different in some way that maybe challenged you in a special way as well?
Yes, I think the biggest piece of it was really how much of it is teamwork versus individual contribution. As an investor, by and large, the role of whether you're an analyst or a portfolio manager, you typically tend to firstly be contrarian. The best investors are usually contrarian investors. They believe in something that hasn't been discovered yet by others that are looking at the same investment opportunity. Whereas when you come into a corporate finance role, what you realize is that it is very much a team effort, and you have to get the entire team to row together in the same direction in order to achieve the collective goals. This is not a function which is a single person function. And so that, for me initially, that took a little bit of a transition to go from individual contributor to a team contributor. I think was a little bit of a journey, quite honestly, for me. And I think it was an important one, and that was a little bit of a surprise. And then secondly, um, it takes time to deliver on change. And so if you're someone coming in from a different background or a different set of experiences, I think you have to allow time for yourself and for your team to make the change that is required. I think you have to invest in it, both from a time point of view, a mentoring point of view, and also assessing the capability of others within your organization to deliver on that change. But always allow time for the change to happen.
Great, excellent. Thank you for that. We like to see if you wouldn't mind to reflect a little on the personal side for us. Wondering what if you have a personal habit or part of a daily routine that in some way distinguishes you from everyone else. This is something maybe a family member would point out about you. Anything come to mind when we ask for a personal habit or part of a daily routine?
So there is a personal habit, and you know, I actually talk to myself in stressful situations, and not like talk as in verbally talk to myself, but I talk to myself in my head a lot, and I can usually analyze a situation from both sides. I can argue both sides of an argument. And what I have discovered is in doing that, I actually make pretty good decisions in that process. Because once you learn how to argue effectively with yourself, you actually uncover all the key elements of making the right choices for that situation that you're in. So I have over the years, I think I've been doing it probably since my first time as an engineer, many decades ago. But that is a habit that has stayed with me, and I think it's very helpful for me. It keeps me grounded, and it also helps me make some choices that are my own choices. After I've assessed both aspects of whatever decision I'm trying to get to. And then the other one, I'm sure you've heard this from many people, is that I do start every day with a 20, 30 minutes set aside before anyone shows up at work to organize my day. And then on Sunday evenings, I'll set aside about an hour, look at my calendar for the whole week, and see if there are 3, 4, 5 meetings that I can decline, which are not critical because you almost always have a full calendar. And I take that time to just do some strategic and critical thinking so that I can get something done instead of just running from meeting to meeting. There are so many decisions which need you to take a step back and think about the ramifications of that decision for the organization. And I like to set aside time for that on a routine basis.
Excellent. We have a lot of people talk about time management and that they're great with time, but you gave us some practical examples. So thank you for those. Wonder if you have a book recommendation for us. It doesn't have to be a business book, could be something you escape with. Anything come to mind?
Yes, and it's not necessarily a finance book per se, but it was really important for me because I was starting to look at startups and smaller companies that was still founder led when I started thinking about next career moves for me. And I view entrepreneurs, that start companies from scratch as a class of their own. So I felt like in order for me to be an effective partner with them, I really needed to understand how they think about their opportunity set. So I would recommend a book that I read in order to learn more about it. It's called The Founder's Dilemma by Noam Wasserman. And what it does is it helps you understand choices that founders make and what it takes for them to be successful as entrepreneurs. Many founders are first time leaders, and everyone evolves at a different pace and with a different set of values, a different risk appetite. And so for me, it was very helpful when I read through the book, and it's a fascinating and very, very easy read. I read through it and I really placed myself as a partner with some of the situations for CEOs that are described in the book. And I understood what that founder was thinking about and how I could be an effective partner in that situation. So I did that. And of course, I read a ton of books on EQ. I think as a leader of any kind, finance or otherwise, EQ is so much like it's so critical to have that in addition to your IQ, of course.
Thank you for those. Those are great choices. We're up to our final question, where we are going to ask you to look forward for us over the next 12 months as CFO. What would your priorities be?
I think so. We've had a very successful, listing on the New York Stock Exchange, and I think my next set of priorities is, like I said, I'm building out a strategic finance function within the team. And I've also brought in a new head of IR, and we are very focused on building out our shareholder base. So we've started tracking, and we started this a while ago, even before we went public. Who are the typical investors in our kind of businesses, whether they're growth businesses or telecom businesses? And we've started doing some outreach to these investors. So my next focus is really internally to do some more build out on the SOX compliance and some of the strategic finance initiatives I talked about. But in addition to that, to be very externally focused and tell our story, whether it's in conferences or in personal meetings, to other investors who could become very interesting shareholders of the stock.
Komal Misra, thank you for joining us on CFO Thought Leader.
Thank you. Pleasure to be here.
Hello, listeners. Do us a favor. Be certain to subscribe to CFO Thought Leader on Apple Podcasts, or if you're an Android user, check us out on Spotify or Google Play. If you like the show, please recommend it to a friend.